The tariff storm is rocking global markets, and investors are looking for any reason to stop the selling. We saw a 2,600-point intraday swing on false reports from CNBC saying that the White House was considering a 90-day pause on tariffs. But this does not sound like a pause.
Will you do a 90-day pause? Would you consider that?
Or Bill, yeah, I think that the president is going to decide what the president's going to decide. There are more than 50 countries in negotiation with the president. We've got the prime minister of Israel coming today. We've had a reach out overnight from Taiwan.
The White House says that reporting not true, and so back in the red we go. Hello, everyone, and welcome to the Big Money Show. I'm Taylor Riggs. Joining me are my co-hosts, Dagan McDowell, Brian Brenberg, Jackie DeAngelis, and with us for the entire hour, Making Money host Charles Payne. You're still coming back. We're grateful.
I know.
Now, despite the selling, something big is brewing. Over 50 countries have reportedly reached out to the White House to start negotiating, including the EU, who say they are ready to come to the table. But the president now threatening to impose an additional 50% tariff on China that is all effective April 9th if it does not withdraw its 34% retaliatory tariff on the U.S. So we will be digesting this all. Charles, I wanted to come to you on some of the intraday wild swings that we're seeing first, because to me, this was a sign that the market is like desperate for any tweet for anything. Does that give you comfort that we're starting to find a bottom, that we're starting to become numb to some of these headlines, or is there still a lot further lower to go?
So far today, two things give me comfort. We didn't hit the low point of the futures before trading, right? Because at one point it was like, people were talking crash, Black Monday. A lot of well-known folks were out there talking that kind of stuff. So it's still out there. That's our support point. I think on the S&P it's like 48.50. The other thing, of course, is the coiled spring action. And again, and we saw a microcosm of it on Friday when Trump put out the positive post about Vietnam. All those shoemakers, all these companies that do business and manufacturing in Taiwan. I'll give you an example. Restoration Hardware was at 123. Yes. It went to 153 right after that. I mean, a 30-point move, 35% move. So this is a coiled spring sort of, environment. There's no doubt about it. The markets want some positive news. I think they want a string of positive news. And obviously, some of these deals would be phenomenal. But I'll also say, what was kind of missed is right around the same time, though, we also got word from the EU.
Yes.
And that was a little bit overshadowed, but that's really obviously significantly more important, because I don't think there's going to be a 90-day ban. I mean, pause. That would be the Trump put, and he's already gone out on that ship has sailed, I think.
Jackie, when we talk about ships that are sailing and headlines, one of the more interesting headlines was the EU, but also the additional 50% tariff on China, which now brings that total tariff to, I think, 104%. But this is at least a market that's not totally reacting to that, maybe taking a breath. And is this maybe now a game of chicken? How do you sort of view these additional proposed tariffs?
I expected the market to go much lower on that. That was sort of the latest headline that would be market moving that we've had in this volatile session this morning. But I think most people see China as the biggest threat to a certain regard. So when China came back on Friday and retaliated, when the Trump administration had said, listen, don't retaliate, because if you do, there'll be more pain coming ahead. The market understands that he's not going to take the China situation lying down at all. Negotiations, I think, are certainly on the table. You've got more than 50 countries saying we want to talk. But you also have a situation where this administration has said it's not just about an eye for an eye tariffs. It's about these non-tariff barriers to trade. And that's what they would potentially be talking about, I think. They would be talking about some of the currency manipulation, the dumping, the subsidizing, all the other things that happen, which would come into play in a conversation with the EU as well. So I think we have to wait and see how this all unfolds. But I also think you've got a lot of messengers out there. I don't think it was a good thing at all to have that interpretation of what Kevin Hassett said. It was a misinterpretation. It was wrong. It rocked the stock market today. But at the same time, you've got a bunch of different messengers out there, and they're all being interpreted slightly differently. Then you have Trump coming on Air Force One last night and making his own comments. And so there's a lot of talk out there versus concrete stuff that this market can cling to. you. Just a last thought. Many of the traders I've been speaking to have been saying they are afraid to go short the market. They, if they thought something was on sale on Friday, they really think it's on sale today. And they're looking to add to their portfolios because they said when this market does rip, it's going to be one of those face-ripping rallies that just, you're not going to be able to ride it if you are going the other way.
Well, and we saw perhaps maybe some margin calls over the weekend if you were now really getting short. That's maybe why we're less down, a lot negative, less than we thought earlier, Brian, because some of this maybe is getting to a washout. I do a chart of the day for you, Brian. To put some of this into perspective, this was the Thursday-Friday sell-off that we had, about the fourth worst decline. It's all the way on the right. This is a drawdown on the S&P 500. So going left to right, of course, Black Monday 1987 is in there. Then you have the global financial crisis, a big two-day sell-off, COVID-19, a big two-day sell-off, and then us. And as of Thursday and Friday, we didn't have the massive drawdown that we've seen in other big crises, which sort of leads back to this feels bad. And I guess the rate at which we've gotten here feels pretty bad.
Yeah.
But all in all, it comes down to messaging, right?
But just to be clear, no circuit breakers. It was sell-offs, but they were orderly sell-offs. People handled it, okay? And then today you get this. Today was so crazy. I don't want to walk by what happened today. You had a pretty lame rumor come out that there was going to be a 90-day pause. It wasn't like a cancellation of tariffs. It wasn't like we're going to reverse course. It was just a 90-day pause. And traders went crazy.
Nuts.
I wouldn't call it a lame rumor. Can I just say one thing?
I thought it was pretty lame.
It was lame in the fact that it was a rumor, but it is what the market wanted. Last night, a lot of traders were telling me, hopefully tomorrow he'll say something about a pause. They wanted that, and that is why you saw that whiplash reaction.
Oh, you can tell they wanted it.
But it was lame in that it was the wrong news.
They want something, but what I'm saying is notice what happened when they got something. The thing took off, and then everyone realized it wasn't true.
Right.
My point is, we're talking about all this bearishness, okay? But imagine if the president, he's got 50 countries lined up. He's got 50 countries lined up according to the White House. Cambodia, Vietnam, Thailand, Japan, India, South Korea, Australia, UK, Israel. They're all lined up. Imagine if he starts dropping results about bringing down trade barriers with these guys. If the market reacted to a 90-day pause like that, imagine if they get a string of wins. I'm just saying to you, we're talking bearish, but let's not overestimate it.
But does that work if China isn't included? Like, is China the big golden goose where you need the negotiation, the deal with China?
Not my view, no.
Okay.
No.
It doesn't work. I say it does work. And I say that's because people see China as more of a threat. They want they're worried about our relationships with our allies right now. So if we can make some progress on those negotiations and China is still hanging out there, I think the market will.
Yeah, that's what I'm saying.
Almost everyone you saw, all these major firms that gamed this at the beginning of the year had 10% tariffs with everyone, 60% with China. That's what the modeling has been. So I don't think the street thinks we're going to have anything concrete with China anytime soon.
Dagan, weigh in.
Number one, you're talking about the swing we saw this morning.
Yep.
The VIX, if we can put that up. The VIX overnight hit 60. That is what we saw this morning is the very definition of volatility. So that's what we should be. And look how much it's come down since the overnight 60 mark. This is people who invest in the market. I don't even want to say traders because it's quite frankly a large swath of the United States and the world. They are on edge and they will sell or buy at the first inclination of bad news or good news first. The reaction in the Treasury market has been a little unnerving. There's been selling in longer-term Treasuries. If you take a look at the 10-year Treasury here, and there have been a number of reasons given, but one is to meet margin calls. Potentially, people are selling their safe assets. And you see the move. I mean, the 10-year Treasury is below 4% earlier. And now it is the yield has backed up significantly. And so there's been some sizable selling in the U.S. Treasury market. That's not good given the depth of our debt in the United States, but still well below the highs of January of 4.8%. Roughly on the 10-year. The one thing that people should definitely pay attention to from what Kevin Hassett said, and the negotiations that are going on with all of these nations coming to bargain with President Trump, is that really relevant? What's relevant is what Hassett said, 10% baseline tariff. The fact is that a 10% baseline tariff is on about 14% of GDP. It's a very small amount. That's about how much trade we have and how much in imports. 86% of our GDP is affected by the other part of President Trump's agenda. That is deregulation, that's the tax cuts and everything else. But 10% is the baseline. 10% based on everything that I've heard from people in the White House, adjacent to the White House, 10% is not being negotiated away. 10% is going to be there in perpetuity.
Right.
So 10% is what you're working off of. The negotiations are just not 10%, but you're going to be, I don't know. So when you're going to be at 10%. If you go to zero and the U.S. agrees to not go to zero, the U.S. is not going to zero with anyone. Based on what President Trump has said recently and in the past, it's going to be 10%. And our average tariff has been 3.3%. So we have tripled our tariffs. And this is President Trump's approach. This is the price of entry into the market. That's how he sees it. In terms of China, Jackie raised this issue. This is what Tom Phillipson, former acting chair of the Council of Economic Advisors, said on Friday. If you eliminate trade with China, that is just a price to pay to not subsidize communism. Yeah. So paying for China, force China to do right, because not only did they unleash COVID on us, more than 1 million dead in America, but then after that pandemic, they unleashed fentanyl on the United States. I know that's not trade, I know that's not economics and finances, but China must pay. We are the victim in all this. We're not the perp. China's the perp.
Yeah, and especially with fentanyl, I think that has been part of President Trump's calculus here for sure.
Just quickly, we're getting some comments from the BlackRock CEO and Chairman Larry Fink saying that a 20% market drop in 3 days has impacts and potential ripple effects on clients. But he does say that in the long run, this is more of a buying than a selling opportunity. Another note I read this morning said that once the VIX tops 40, 96% of the time, the market is higher 12 months later. So again, some big voices coming out and talking about these markets.